Hello, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Thursday, the 12th of July, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You'd think I'd have that recorded and automated by now, right? Wouldn't you? Doing these videos for 5 years. The market stance this morning is bullish, risk on. The leader of the pack today is the Dow, up 206 points in the futures. Indication that the market is moving higher. The Dow's up 0.84%. The laggard today is the Japanese yen, followed by the bonds, the notes, and the euro. Gold's up 50 cents. Crude oil, which took a beating yesterday, down about 4 points from the prior close or so, $4. Crude oil's up 0.77%, trading up 54 cents at 70.92 in what looks like a completely balanced session. So let's take a look at what we expected yesterday. Sorry, I lost you there for a minute. Yesterday's main expectations you see here is an open auction that is responsive with a target of 27.8775. That's exactly what we hit. We pushed up to 81, 84, then 27.8775, and we came right off. I expected it to hold sideways, but what it did is it pushed all the way back down to 77. Neutral day, completely balanced. Scenario 1 was right on early. Here's what happened. Very noisy chart. So there it is. Open auction. Push. Sorry, I'm having a sneezing fit. Push to 84. Pull back, consolidate. Gets to 27.8775, which is the high of Monday. High of Monday. An interesting zipper consolidation here. Huge battle in this area. Finally releases back to the mid. Retests. Fails to push higher and comes right back into the opening swing. The opening swing is in between these two dashed lines. Gets back to the open and extends the range down. Big battle right in the middle. With the VWAP mid and point of control shutting off buyers through to the end of the session. Range extension down, giving us a neutral day. Notice that pretty decent taper at the top. Very Gaussian, very belly fat kind of profile with a decent taper at the low. The market closed lower with the delta pushing lower. However, the market did not get down into the low, into the close. It looked like an interrupted auction. The expectation for today, based on yesterday's trading. So yesterday, what the market did was it found consensus on value. It did a really good job of testing the high, testing the low, coming back to the middle, building up the middle, and basically agreeing on price. It facilitated trade very, very well. The volume was just slightly off of the common, slightly off the common. However, it did close, it did push into the close lower, and it pushed into the lower quartile of the range. So this is a neutral day. However, it's not neutral normal. This is what would be called neutral extreme. The only reason it isn't a neutral extreme is because the point of control did not have a shift out of the IB, and hope, ideally would be near whatever extreme the market closed at. Essentially, the market just drifted, prices just drifted on their own down, but they were unsuccessful bringing value to the low of the range. So this morning, the expectation coming in, of course, we can see that the market is trading around 27.90, with 91.50 being the high. But what was expected coming in today is that we are very likely to be trading around 27.80. Now remember, this area here, 27.80, 27.79 and a quarter, is a key low volume node on the composite. On the composite that was built after the sell-off in February. This is a key area that we're filling in now. So what we have, if you look at a bigger picture, let's pull up the 15-minute. What we have is a market that has trended up, gapped, trend up, gap, consolidate, and then a gap below, right down here, tested the upper gap, almost tested, well, actually did test the lower gap. Let me turn that on. Flex levels. So you can see that it tested this gap here, the light gray, tested this gap here, light gray. So it ping-ponged between these two gaps and ended up closing near the lows. And then today it is trading above the gap, above the higher gap. So this is a candidate today for a new micro composite. As the market balances around itself, we build a new micro composite. Let's color it something different because everything is yellow or whatever. So let's do a volume shaded green just to make it stand out. So look at how fat this is. This is just... That is beautiful, right? In auction theory, not very healthy. But you can see how fat and consolidated this is. This a fair amount of energy in here. The volume's not all that great for 3 days. 251 million, 2.51 million over 3 days gives us about an average of a little over 800,000, 825, 850,000, something like that. Not all that great, but what we've done is we're pushing through this low volume node right here on the 3-day composite, and are the market's trying to push into the upper distribution. Now, if we get, as we hold and extend this overnight high higher, what we will aim for then, the obvious target becomes 27.94 and a quarter. This point of control, that is the last agreed upon price up there. And so as the market holds, this would be, and I managed to get a long on because it's holding that low volume node. Now we're just above it. We are teetering right at it. Very precarious spot to open at. Not ideal. But if it tests lower and it starts to push to extend that overnight high up, then hold on for 27.94 and a quarter. 27.94 and a quarter. That is the most traded price in the area. And as you can see from this profile here, there's a fair range there that it can retest where we had consensus before. And the scene of the crime, the spot from which the news occurred that caused the drop yesterday, is 27.97 even. 27.97 even. So that becomes the next big target up above. Now, if the market opens right here and it moves down and up and down and it starts to move lower, what do we aim for? What's the target? The target then is to hold, because this is a balanced profile. The target becomes the value area. So the value ranges become important. So value area high, 82.50, but you're really aiming for 80.50 here. The composite point of control is at 81. So really a push lower has us looking for 82, 81, and 80 as the key targets below. So that's where we're headed if we push lower. So it's very clear this is basically a double distribution micro composite. Remember, I told you yesterday, 2 auction based profile based situations give us the clearest information, and that is a big gap and a double distribution profile. This is a double distribution profile. We got a gap yesterday. We got lucky, right? So that's where we stand. Now, if we look at the bigger picture and we start looking at the composite, what is a composite? What the heck are you talking about? A composite is basically a volume profile that looks at 1 bar per day RTH, and we're looking at the big picture, multi-day picture. So this composite goes all the way back to 2015 to build these profiles, and then we're currently focused on the profile that was created back at the beginning of February when the sell-off happened, because basically what we have been doing for the last 6 months or so is trading the range between what happened at the beginning of February till about mid-February to 12th, something like the 2nd to the 12th of February. That's all we've done this whole time. We've traded basically those highly volatile 2 weeks, and we've been stuck in here balancing out. You can see what kind of a profile we've generated. We've generated a multi-pronged profile, and we've been stuck here quite some time. Okay, and so we keep moving from balance area to imbalance to the next balance area, back to the balance area, blah, 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 blah. And we're really aiming for a test 2800 and 2811 as being key above. The market is really set up until this, until the sell-off yesterday. This product was very much with high probability set up to breach 2800 for a test of 2811 to get into the low volume node up here. That's really what we're rigged for. High probability play that we are likely to squeeze shorts and push higher. Yesterday's news brought us back, and today we're coming right back into this upper distribution. So as I zoom in here into this area, you can see that we just pulled back a little bit. So from here on out, we have one time framing up, one time framing up, one time framing up, to one time framing broken, a test, a logical test of Monday's high, and a failure, a logical test of the gap zone between Monday and Friday, which was non-farm payroll day. And then here we are back up and testing where we were on Tuesday, which is where we were for basically the entire month of June. And it is likely, so it hasn't given up all that much room to the downside, and it is likely to push 2800 and 2811. That's my longer term bias. I'm a day trader, so take that with a grain of salt. Okay, what am I expecting for today? Let's clear up some of this noise. Today's expectations. A lot of clicking over here. Today's expectations were opening right in this low volume node in between these last 3 days. The expectation is it's likely to introduce a response. We're gapping up. We're likely to introduce a response. We're opening out of range, but we're opening in balance, in overall balance. We've been here for 3 days. I'm expecting responsive selling to attempt to push us into the prior day. I expect buyers to take this back up to extend the overnight high. I expect that it is likely to push into 27.94 and a quarter, the most traded price in the upper distribution, and then eventually getting to 97, consolidating before squeezing out. Okay, so I'm looking for mainly a short squeeze today to the upside. We may not get this test lower. Okay, so we may not see this test lower. We may see just an open auction that pushes higher. That is the most likely play for today, given the configuration of the profile and where we are. If we open up where we are now and squeeze the overnight high and get to 94 and then stall out, we are likely to move down into this 27.75 area, 27.88, consolidate, test, and then finish in balance up basically inside of this range. Okay, test, verify, look for buyers, buyers found, come back into the range. That also leaves us with a high probability scenario where we trend open test drive higher, open test drive lower. But these are the two key scenarios. What I'm looking for today is, what I'd love to see is an open auction that drifts down and then fails to hold yesterday's range, meaning it drifts down and then we see in the order flow, like we did in the overnight session, we see in the order flow that the market is not accepting these lower prices and it's being well supported. And in that case, you could start to build I could start to build a long position with a rotation for 94. Now, the range is not all that great to work with here. It is summer trading, but there's plenty here to work with. Just don't expect as much range as we saw yesterday on the gap down. I expect the range to look a lot more like it did on Tuesday, where we had like 9.5 points or something like that. So that's 9.25 points. That's what I'm looking for. But I'm looking for scenario one to finish the job and breach out of this and start pushing towards 2,800 for the test there. Okay, I'll leave you with those thoughts. Good luck. If you're a Convergent member, just remember we're doing an order flow, the study hall session on order flow today. Your sign up was sent to you by email, and it's also in the notices board on the member chat session, members chat service. Good luck today. I'll catch you tomorrow morning. Take care.